Hey, Andy, Jamie, happy Thursday.
Hey Scott, yeah, thank you for that intro. And hello, Jamie. How are you, my friend?
What's up, fellas? What's up, everybody in attendance? Welcome, welcome. Here we are at Thursday. The week is almost done.
Oh boy, they fly by these days, don't they?
Yeah, hey, the older you get, the more time
Oh yeah.
progresses.
Yeah, let's don't get all depressed going into the webinar here. No. All right. All right, guys. Thanks to you so much. Hello. I see a lot of regulars in there. Wally, Christopher, Mike C. See a lot of new people too. Actually, we got a good little attendance today and still filing in here. Thank you. Thank you so much for taking time out of your day, and I'm hoping we will not disappoint. We're going to have a little fun today, do some back testing later. That's always fun. But before we do, let's handle the disclaimer here. All right, guys. You're going to be witnessing two guys who like to talk about stocks and setups and markets and things like that. But just remember, guys, it's for educational purposes only. We are not trying to get you to invest in a stock or anything like that. So if that's the kind of advice you're looking for, you might want to look for a broker or somebody who's licensed, like an RIA or something like that. So, but anyway, we're more fun, and let's talk about all the fun we have in support, education, and training. This being part of it. All right, so. No, there's a lot of new people in here, guys. When you first get the product, it can seem a little overwhelming, but man, you're going to find out it's very intuitive, and we're going to make every stride that we can to make sure that you find out it's intuitive. And we have webinars every day at 5 Eastern time in the same time slot, Monday through Thursday. Usually Jamie, Steve, and myself, we kind of shuffle around and dance for you. And then on Wednesday, we do have our CEO, Dan Merkin, and our CTO, Brad Williams, that come in and can show you. It's a great Q&A. They'll talk about new versions coming down and what they may have on them. So that's always a fun one to attend as well. And then let's not forget our Friday support session. It's a 3-hour no content as far as presentation goes, so it's good for you. You can come in there and we just fire away with us with questions, and we'll answer them and show you our desktop and present. And it's really good. It's been a great hangout. People are learning a lot in there, so get in that Friday support session. And let's not forget the traders room with Barry. Barry's really excited because he's got a new chat room to work with. I know a lot of people are loving it. If you haven't been in there, guys, it's free for everybody. So even if you're not a TI subscriber, so get in there. It's a great hangout. Over 500 traders in there. Some really good ones. All right, TI University. What this is, guys, when you sign up for Trade Ideas, we highly recommend this. It's 4 classes, all at 12 Eastern time every day. Don't fret if you're working or you can't make it during that time. These are all recorded for you. But I would suggest if you can get in there live to do it live, because there is a Q&A at the end of each one of these that may last anywhere from 15 to 30 minutes, depending on the questions that come. We start out with Beginners 101 on Monday, and we work all the way through Thursday, at which time we complete Advanced 401. And guys, we pretty much cover like the whole Trade Ideas product in these 4 classes. You're not going to miss out on anything. So it's something you have to register for. So be sure you get in there and register. And yeah, attend that. That's you're going to learn a lot. All right, Brokerage Plus, guys, we're having more and more fun with this and learning more stuff as we move along. What this is, for some of you who may not know what it is, it's a way for you to automate your trading. And this can be fully automation, or maybe just if you want to do kind of gray box style, where you let your strategies get you into the trade and then you kind of manage them from there. That's my favorite part about it. That's where I think the most benefit comes in. And man, it's a great little tool. And if you want to know more about it, go to trade-ideas.com/beta. And I really believe this thing is just going to blow up, man, because and we'll be adding more brokers hopefully in the future because it's a really nice interface. All right, guys, here's the agenda for today. We're going to talk about the market, a little market recap, and then we're going to talk about Holly. Holly didn't have a bad day in an otherwise very sloppy market. Jamie will kind of take the reins for a little bit during that session and go over some trades for you. And then we're going to do some back testing. And I think this is going to be fun. And we're going to back test Let's Go Fishing on a swing trade time frame. And learn something today, optimizing on our earnings days. Pretty cool. So we'll take a look at that. I think you'll enjoy that. But let me back out of this for now. And let's pull up the good old SPY chart so we can start talking about the market. We won't spend a whole lot of time doing this, not when we got all this great software to show you, but people do like to talk about and get our input on the market. Let me zoom in a little bit here, and lo and behold, we have made, here's our little V bottom, potentially a V bottom there. I say potentially because we can always turn back around and test that low again, but the bulls would like to think that it's not going to happen because of the follow through. We've seen this for a couple of months now, and look where we're at, guys. We are pretty much right on the fast line, Steve and I like to call it. That is a 10-period moving average, where we've pretty much closed ever since we broke above it. Well, this was one close below it, but from this point on, you can see this green line here, guys. We have kind of held it, and when I say held it, I mean we closed above this green line. So, boy, we are kind of at a crossroads again, because here we are, we pulled back. This looking like a nice little setup heading into Friday. This is one where if we do, break this and close below this 10-period moving average, we could, back and fade, back and feel, I should say, a little bit down to retest this 200, which now you have your 20 crossing over your 200. I don't know if that has a fancy name to give it for the 20 over 200. If somebody knows what that is, drop it in there. I don't get too golden crosses and all that. I don't get carried away with those names and how much weight to give them. But nonetheless, you do have the 20 crossing the 200 right now. You can see here, guys, it was almost textbook. As a matter of fact, I was looking at it, and let me put this right up here to these top levels up here, and that's pretty much right where we tagged. Went about 15, 20 cents above this high, going back over here, and we stopped, and since then, we've kind of been retracing a little bit. Jack says the bronze cross. I don't know if he's got a smiley face. I don't know. So there we are, guys. We're kind of pinched here. Okay, here's what we got. We got the 10-period moving average, which is a great momentum line that wants to continue the momentum in the same direction. And then we have huge, huge, huge resistance above. Who's going to win? It could be one of those explosive moves either way. Okay, well, obviously, if you violate this basically triple top right now, and you could call it a quadruple top if you count that one. Explosion through this, yeah, it could be, it could get it on pretty good. And the same thing goes for the downside, okay? Because not only would you be breaking the momentum line, the fast line, the 10-period moving average. For the momentum traders maybe bailing out, you may have a lot of people who have been sitting out in this market since this time. We've come up, that's probably where a lot of selling hit, and now if you break it and start heading back the other direction, a lot of these people may say, no, I'm not going to sit through another one of these. So I'd like to think, guys, what this is, it's just mentality. These charts are, it is just people are conditioned and they don't change. It's been this way throughout history when it comes to trading. They're just emotional, and that's what a chart, basically candlestick charting does for you. It just kind of shows you a diagram of human emotions. But we're going to see what happens. You know, it's interesting. I want to point out a few things. I'm not going to real quickly. The IWM kind of held up today, and it was showing some, you know, the weakness on early on, back below its 200. The Qs held up better than the SPYs did today. They actually finished a little bit up on the day. Diamonds, yeah, basically looking like the spiders there. But interesting enough, the bonds were selling off today, which means interest rates were going higher. And what happened is, you know, the PMI number came out pretty hot, and you know, the signs of possible inflation. So that always gets interest rates potentially moving higher. So something to keep an eye on, because like I was mentioning, I think the other day in Steve's webinar, it was feeling, again, until the last couple of days, it was feeling like that Goldilocks economy in stock market, where gold was going up, bonds were going up, stocks were going up, all assets seemed like they were going up again, much like we experienced back in 2010, 2011, when we were basically at zero interest rates. And once again, yeah, they kind of tagged it with that name, Goldilocks economy. And it started to get that feel again. So you might want to keep an eye on interest rates and the bonds, just see, you know, because if inflation does start to get hot, obviously, the Fed's hands would be tied. They eventually would have to start raising rates. But, well, I guess they don't, but they would. Anyway, Jamie, that's about it. I always like to keep an eye on, you know, in this environment, because now I'm not going to go down that road. Jamie, what do you got anything to add?
No, man. I mean, you know, it seems like we've been seeing the same thing over and over. It feels a little bit like Groundhog Day, because, you know, over the past 2, 3, 4 days, well, we've kind of been pretty much in the same spot, just kind of vacillating in that new little range right there. So until we bust out or bust down, or, you know, go sideways a little bit more, it's just going to be more of the same.
Yeah.
And, you know, the statistical model known as Holly is kind of reflecting that market action. And, you know,
Yeah.
we did have some get up and go type of stocks today. So we'll take a peek at those as well. But not a bad day for Holly.
No.
You know, and, you know, today is even more to the point where, you know, we always talk about this, where we pile into all of Holly's trades. Probably hasn't been the most conducive market for that type of action here lately, but that doesn't mean that some of us have not been trying. But, you know, you've heard, everybody out there, maybe some of the new people have not heard this, but it's something that myself and Andy and Steve always say about Holly, and that is, it's just a souped up ticker when you boil it all down, right?
Yeah.
Just another high quality window. And for those of you regular attendees, you know, when we talk about risk on, risk off all the time. So we had one, you know, we had a couple today play out in beautiful real time, and it was very satisfying being able to see what was going on and go, I'm reflecting back on all the hundreds. It's probably up to the thousands now of risk on illustrations that I've laid out, and you know, nailed a couple of them today. So hey, you know, even though Holly didn't have a banner day, man, once you get to know what to look for, and once you've seen these things over and over again, it really just becomes about repetition. And after you see them X amount of times in a row, you'll be able to start nabbing some of these as well. So if you're ready, I can grab it from you, Andy.
Yeah, go right ahead.
Unless you wanted to do any Holly commenting before.
I just wanted to talk a little bit this 2.0. You know, I was really impressed. I'm always impressed when risk off performs so well. And you can see here, if I click on my little column here and for risk off, and you can see the nice risk off numbers, guys, and only a couple of losers. That's beautiful. I like to see that. You know, not big losers. You got your winners much higher than your losers. That's good stuff. No stop outs. I love that. So there was no stop outs today, and it was funny. You can look at the spiders. You can see why risk off performed best in all three segments.
Yeah, I mean, the intraday market is just a chop fest. I mean, it really is here lately. So, you know, having said that, there's plenty of good opportunity, short, long, short, long, short, long. I mean, things are flopping around all over the place.
Yep.
But hey, that doesn't mean it's easy. Curious real quick here, Andy, I see that nice profit in your risk off column. What is are you doing the risk-based stop?
Yes, I got it based on $200 based on stop loss based on the stop. Yeah.
Gotcha.
So and risk off for 2.0 was 970 and 778. So what he was asking me, let me just point it out for the guys real quick because I haven't showed this in a while. If you go to tools, okay, and you go to, it has been a while, option.
Options. Yeah, there we go.
Trade size. You will see here, and this is the same way I have it set up on Brokerage Plus on my strategies. I am risking $200 based upon the stop loss. So if Holly comes out and has a 25-cent stop loss, the software will automatically go out and buy me the share size based upon if it goes to that stop. I would lose $200 and no more. So that's why you see anytime you see a stop hit, it'll be set on 200 because that would be what I lost based upon you know, the stop. But that's about it, Jamie.
Yeah, and that risk off blotter, I mean, that looks like you want your blotter to look every day.
Yeah.
You have your losers, but you have more, you know, more green than red, and hey, simple equation, not so simple to pull off.
No. Exactly.
Okay. Let me grab the screen here real quick.
All right.
And you should have eyes on my desktop now.
Got it.
And I just saw a question roll in, so let me absorb it real quick here. That is a good question, Chris. And the question was, of all these plays or the signals that Holly spits out, how many of them will be optionable? And you know, the honest answer is no idea. And you won't know until you look at that symbol and then see if there's an options chain available. And that's the only way you're going to be able to, you know, be privy to that information. Which brings up an interesting maybe feature to add in the future. You know, have a little red dot if it's optionable, or just some kind of indicator that says, hey, yes, there is options available on this stock. Don't have anything like that, but you know, Chris, I will say that would be an interesting feature. You know, so we'll keep that in the coffers and maybe get that on over to the wish list, so to speak. But yeah, good input. All right, and as Andy was pointing out, you know, Holly 2.0 wins the day over here, up $1.86, and this is just a 1 point total. And you know, whereas Andy's got his on a certain dollar amount for risk-based stop, since I'm just the old school guy and I like to compute the information on a point by point basis, you can see here that's the way I'm displaying mine. So all of these are just straight up points that were gained, or you know, dollars, cents. Obviously, if it's not over a point, we're going to see 73 cents, 68 cents, which is just the net move of the security. So Holly 2.0 winning the day at 1.86 on risk off. We'll see that number correspond with 2.0 right here on risk off. If you're buying and holding everything, you did substantially less. But it's interesting to point out, risk off won the day, finished at $1.86, but during the session, risk on popped up to just shy of, you know, $3.58. So something else to keep in mind here. You know, there's a lot of ebb and flow in these blotters on the day, and you know, whereas Holly's handling all the, well, bringing all the entries to us, then we have to worry about the exits. So there's a lot of different methodologies you can apply to this technology. So, you know, buying and holding the rest of the day, 61 cents compared to $1.86 at 3x, but had intraday opportunity to pull out a little over 3 points on a timely exit. And of course, timing this equity curve is just like timing a stock. If you're long, are you going to get the top? Probably not. Every once in a while you will, right? It's kind of like this risk on trade today, SVMK, which is just a beauty. Andy, I saw your illustration earlier in the day that you spit out on the Slack channel there.
Oh yeah.
Illustrating, the risk on, risk off. This one is so gorgeous, and when I saw this one come up in real time, I'm like, and in my mentality this morning was, okay, let's just watch the Holly trades come out, and let's just pick the one that we think is going to do it for us, right? That was my mentality this morning. So kind of a slow start, right at the beginning, not a lot of signals coming out, and then boom, 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 she starts coming to life. And I believe there were only a few symbols triggered before the SVMK came around, but I got off my chart there. Here we are looking at the 15-minute candles. Holly gives the signal right here. And, I'm a range break guy, right? Range break already occurred. I'm like, okay. Usually it's the reverse, right? So we got some really strong statistical probability, strong stock pulling back. We can see right here, anything coming out of that little guy had a 63% chance odds of working based on the calculations that were done the night before. And risk off, whereas the overall day was risk off, we can see Holly getting out risk off right here. Books a big 16 cents, right? But we got a nice spread here, not quite 60 cents on a relatively low dollar stock here. So really liked this one, not only because of the statistical probability, range break had already occurred. Not too far after the actual range break. So what was my next window that I consulted before I pulled the trigger? Well, my little friend down here, my single stock window, primarily to check the relative volume. So I just stacked up 3 positive attributes in real time when this trade occurred. We got stat probability from Holly, the range break had just occurred, and it's still relatively close to that breakout point. Oh, we got some monster volume kicking on SVMK today too, and also a little bit of room on the daily, depending on, once again, was it going to get up to here and stop? Was it going to get up to here and stop? Or was it going to do what it did, which blasts through all of these levels here? The more volume you have pumping behind a stock, then the higher the chance that it's going to break some of these levels, right? And of course, in the move, and I mean, the stairway to heaven right there, baby. And the 10 period, keeping that thing nice and tight. And whether you got out with Holly or whether you did a little bit of half and half on the risk on, I ended up staying in this one. And what did I do? I'm like, yeah, no, go ahead and put my profit target in. Well, it might not get over 15, so I'll just put in a $14.99. What happened? Boom, keeps on going. Left money on the table, but hey, so be it. It was a nice percentage gain, right? And it was about as pain-free of a trade as you could hope to get, right? Not even coming anywhere close to the stop loss level here, or maybe a little bit, but a stop is only a stop if it gets hit. Came nowhere close. So on a lower dollar stock, booking a 5% as of the close, and was up a lot higher than that at the peak, but just a stellar trade from Holly today. Met a lot of the things that I like to focus on: volume, alternative chart pattern coinciding with the statistical probability, right? So just a wonderful trade coming out of Holly on that SVMK. And then we also had some really nice, well, I can't say this was, well, actually, whether or not you're going to, this is Holly getting out. Holly's up here, we're up here nice and profitable by the time she peels out of it right here on a profit save. Probably not the timeliest exit, but at the same time, this one would have been a little bit more difficult to just go, oh yeah, I'm staying in. And predominantly because of what I see on the 10 period here, right? You always hear us talk about when a stock is in play. This is a great guiding hand. Holly gets out right here, which, I'd have to say, Andy, based on if I didn't get out up here, and you're like, well, we got to let the thing work. And of course, some of them steal a little bit from us. But once we get that candle close under that 10 period, it would have been kind of hard for me to go,
Sure.
what, I'm going to stay in it. Now it would have worked, but being realistic about it, probably not the easiest call, right? Even though it did work. So a couple of great risk on examples, even though risk off won the day on this on Holly 2.0. And hey, you might as well take a peek at one more. Difference between 35 cents and 51 cents. There's only 16 cents in there, but hey, every penny counts. I'd much rather make 40 cents than 35 cents. But hey, right here we get in immediate gratification, which is all good, fine and dandy. No pain really to be set there. But once I got up here, just pretty much tabletopped, right? So we could have made the call here and went, you know what? Let's go ahead and peel out a half with Holly, keep the rest. What do we use if we engage in that methodology? Well, the entry line, a break even. So we book the profit on the first slot. If it does roll over and get us out, still a profitable trade. This one would have kept you in, whether you got out on the spike up here, which is unlikely, or whether you held it until this later tier push up towards the close. It never came close to stopping you out. So not real exciting, but a great opportunity of risk on when they don't even come close to that zero line or that entry line, trying to get maybe another nickel, dime out of that trade there. So, especially on a long-term timeline, months, 3 months, 6 months, a share here, a share there, a penny here, a penny there. It all adds up, man. It all adds up. So you want to get every ounce that you can on every trade. Coincidentally, lower price stock, not real exciting, but look at the move and look at the percentage value, right?
Yes.
It looks completely like this looks so much sexier. You're like, oh my gosh, look at that percentage move. But hey, this little boring move right here, it was just the beautiful timing. Boom, you're done. 7%.
Yep.
But yeah, that one, so good. All three of these. And that's pretty much it from the risk on camp today. You can see down here, Neo, not doing too bad, only on 4 trades, risk off for Neo too. Basically getting
Especially
all of
after that, it's a good fight back after that first stop hit.
Hey, mimics human trading, Andy.
Yeah.
I've never seen, and this has always been the paradox, and I'm sure you're familiar with this as well, Andy. But there's something that happens when you get down, right? And in the older days, when it was just a big, we were trading hundreds of thousands, if not a million shares a day, boy, you get down quick in the first hour and you got a $2,000 hold to make up and you go into turbo mode.
Yep.
Boom. By the time the close rolls around, you're sweating, but you're flat. You might have went up 1,000, but after commissions, you're flat. So we'd always joke about it. We're like, well, why can't we just put ourselves into that mode right off the bat? Nobody can. It's not the way that things happen. And when you said that, it reminded me of that mindset. But hey, Holly is non-caring, non-emotional. Hey, stop out, no big deal. Off to the races. And really, it all came from one trade, this AERI, which once again, how many times have you heard that? Make 4 or 5 trades a day. Most of it comes on one trade. You got some small losers, some small winners, and then the one that does what it's supposed to. Well, then that was your pay for the day. So anyway, I'm kind of getting off topic here, but when you've got 20 plus years of memories up there, sometimes it happens.
No doubt.
Yeah. All righty. Well, we're at the bottom of the hour, and I know you got some good stuff to show everybody, so let me kick it back over to you.
All right. May have to scream a couple of times for my dog to shut up, but
sounds like a killer.
Oh, he's a mean one. Yeah. All right, guys. This is. I always try to have some sort of little treat for you guys. I know a lot of the normal long-time users has been coming in here. Like for me to build something cool and show it to them. This is not a new alert, but it's one that's been around. You've seen it on my screen for a very long time. It's called Let's Go Fishing. So I started thinking, man, why don't I just back test this and see what happens? Now, we're going to do this today, but I'm going to kind of warn you, because when I go into back testing mode, I mean, there's a lot of madness. I'm not sure there's a lot of method to my madness, but there is a lot of madness. And what I mean by that is I may, as a matter of fact, today I was sitting there and I'd back test. I'd go change a filter real quick, back test, and just continue running my back test. I looked up and I think I had like 38 summary pages open. It was crazy, you know. I'm sitting there just closing out all these summary pages. The reason I'm telling you this is because there's no way I can take you through the way I back tested. Okay, I can show you the results and I will share with you the results, but trying to get to those results the same way I did is impossible. You know, it's just but we're going to try to just do it. This is going to be just a laid back, us working together, trying to create a good back tester. Okay, so at times you're gonna be thinking, gosh, where is he going with this? But I want to make it as realistic as I can, because I think it can help you. All right, I'm gonna try to give you some pointers when it comes to back testing that can really help you. So let's just do it. Now I'm going to just start off with this one. This is my basic one that you guys been looking at. And for the new guys in here, what we're able to do with this software is we can create, as long as it's an A window, it needs to be an A window because it has to have an alert and it has to have a timestamp. If we go get those two items, and of course you need an exit, okay, but that'll come down the road. So if you have an alert and a timestamp, in other words, a price and a timestamp, we have the ability to back test this up to 60 trading days. So this is a very valuable tool, because you can take your strategies and you may not have any idea if it's a good strategy or not, and then you can put the back tester to it and you can find out. And then you can start optimizing, kind of like what Holly does, your own strategies. And this is when the tool becomes really valuable to it, especially with Brokerage Plus now, because if you really get a good strategy, you can implement that thing inside Brokerage Plus and put it to work for you. So let's start this. I'm going to give you a really quick rundown on what this is looking for. Okay, it's a new high, and here are the filters. All right, we're looking for, in a nutshell, basically, I'm looking for stocks that have been beaten up over the last year. Okay, thus, if you look in here and you see position in your range, you're going to see I have a maximum of 35. Well, what that means is if I click on a little show me button, the price is no more than 35% above the low end of this range. So now we know in the last year, okay, this is in the lower portion of the yearly range. Okay, so it would have to be in a downtrend over the last year. But if you look right here, position in 10-day range, it's at a minimum of 98%, which means the price is at least 98% above the low end of this range. Okay, so now we know it's on the upper end of its 10-day range, you know, potentially trying to turn around. You can just visualize a chart in your head, and if it's near a 10-day high, it's trying to turn around, potentially on the, you know, do a trend change, we call it. Now, this one I have, the reason I call it Let's Go Fishing is I have some fundamental data in here, filters. You can see here I have cash to debt ratio of 0.2. Okay, that's just taking the company's total cash. Earnings per share, a minimum of just $1 a share on earnings. Price to earning ratio, I want the max to be no greater than 30. Okay. So I'm not looking for stuff that, you know, has a very high price to earnings ratio, like a lot of your, you know, big movers. A lot of your fast growing companies will sometimes have, you know, PE ratios of 200, 300. You know, I'm not looking for that. I'm looking for more value. All right. Of 500,000, but I'm going to drop this down to 300,000 because we're going to be swing trading. This is going to be a swing trading one, so I'm not too worried about the stock being real liquid. All right, so we're going to drop it down to 300,000. this will get more stocks, more like I said, a bigger sample size. All right, so let's go click OK. And now what we're going to do is we're going to back test this thing. The way we do that, we just go right click, back test. You want to always open up the start time all the way, because our back tester will show you when is the best time to run it. Okay, you don't need to guess. Is it in the first hour? Is it this price range or this time range right here? No, just open it up. Our back tester will show you. Timed exit. Okay, I am going to run this at the market close. Like I said, it's going to be a swing trade tomorrow plus 3 days. And guys, I have found that this is either at the market open or at the market close. Tomorrow plus 3 days is probably the best when it comes to optimizing, back testing. You try to do something for 10 or 15 days, honestly, nobody has a clue where the market's going to be 10 or 15 days from now. You can kind of look at a chart a lot of times and kind of get a feel of where it may go in a short-term time frame, but you have no idea. And if anybody tells you they know where the market's going to be too, they're lying, because you just don't know. All right, risk management. We are going to do a percentage. All right, and since we're doing a swing trade, we're going to give it some room. We're going to do 3%, hoping to make maybe 6 to 10% on the upside. But I'm not going to enable a profit target. I'm going to let it run the full time, the full 3 days. Advanced, we're going to open it up wide open. All right, summary, and now let's give this a simulated buy. And what it's doing, it's going through the server, going through every trade that came through this alert over the last 60 trading days, as long as they had an exit. They have to have an exit, obviously, to back test it. And, well, you were a lot faster today. All right, not bad, okay? But, guys, I'm gonna tell you, okay, the market, this is the market we've been in the spiders, okay? It's had a really nice move. When I get finished with this, you're gonna see some pretty good numbers, but it's gonna be askew just because of the market we had, not that it's going straight up, but it's kind of going, it's definitely been in a nice little trending bull market over the last, well, not 60 days. You can see here where we had that anomaly move right before Christmas that ended on Christmas Eve. This is why this was performing so badly. But hey, you know what? It's gonna, all that data is gonna be in, that data is gonna be in there. That's where you see this big old drawdown right here. All right, so let's see what we can do, guys. And what we're gonna do here is what I wanted to look for, I was kind of hoping to keep this. I wanted to back test something kind of on fundamentals. I'm always doing price, time, time. Those are great. Those are great optimizers. But I wanted to see if I could get something on fundamentals really working for me. So that's the first thing I back tested. And let me see. So I'm going to go. There's our time. There's our price. But I'm going to go into other filters. And like I said, I'm doing the much shorter version. I looked at a lot of things today, but I'm going to show you what stuck out at me. And I put it in the when I mentioned it, talking about it this morning, earlier before we started, that about earnings days. I've never back tested something on earnings days. And I said, well, you know what? I got a lot of earnings in here, and I got cash debt ratio, EPS, price to earnings ratio. Let me check earnings date. So I wanted to do that first, I believe. Like I say I believe because when I start doing this, I do a lot of jumping back and forth. And I'll talk about that here in a minute because I really think it helps your back testing. All right, so let me find earnings date. See all these cool guys, you can back test on any one of our filters. There's earnings date. All right, and let's go ahead and take this interval down to 0.25, okay? All right, Wow, look at all this red at first. Lot of red, lot of red. Let's see if we start getting green here soon. That's what we want to see. We want to see a big block of green come up. And what do we see here? Wow, this is nice. You had all this red, and now I go to earnings date 1.25. It starts getting really good. Now, what does this mean, guys? For those of you who are new in here, earnings date, anything with a negative figure means earnings already happened. So these ones up here, these were after earnings. This would be 5 days after earnings, 6 days after earnings, 4 days. You see where I'm coming from? And then all of a sudden, you get to the days before earnings, and they start getting really green. I'm going, wow, that's interesting. Remember, these are potential turnaround candidates. So I'm going, this is pretty interesting. Right before, basically, 2 days, we'll call this 2 days before earnings, until about 19 days before earnings, they get really.
And those are some high win rates in that.
Isn't it? So I'm going like, wow, this is really cool. So I'm always trying. Like I said, I went back to, you know, all this data and all these charts we look at. It's just measuring human emotions, or potentially what. In this case, guys, I started going down that rabbit hole, and I'm going like, why would that be the case? And I started thinking, well, it's before earnings. Earnings is, you know, coming up. You can see when you get way outside of earnings, it starts getting sloppy and some bad numbers. So I started thinking, you know, what these are potential turnaround candidates. Why would they start, you know, having such a good win rate, you know, 2 weeks before earnings? And I started thinking, wow, the smart money, and it happens out there, they know, the smart money knows if earnings are going to be good or bad. So they start accumulating these, you know, going into earnings. Makes sense to me. I mean, that's about the only hypotheses I could come up with. But regardless, I don't care. Okay, I just want to play the numbers. So let's go in here. We're going to put this at a minimum. Goes into our back tester and does it, I mean, our configuration, and it does it for us. And I am going to put this on. Gosh, there's some real good numbers here. These aren't bad because the profit factor is pretty good, even though the win rate's not that good. But these, let's go ahead and saw it off right here. And now the one that I did earlier, this is what I came up with. And like I said, there's no way I can take you down the path that I got these numbers on. But this performed the best, maxed out at 1945 on max on earnings. But I'm going to go ahead and do what this is telling me right here. I'm going to max it out at 17.99. I can always come back to that, and I do. I will go back and forth between optimizing these filters several times. You say, why do you want to do that? Well, I'll show you here in a minute. All right, so I just did the earnings date right here. It's the only change we made so far. We're going to put this back on summary, and we're going to grab Let's Go Fishing, and we're going to run it again. And guys, note number one, every time I make a change, I do another back test. This is why I have so much. Because when you change a filter, it's going to change other outcomes and other filters. So I don't like going through and picking a bunch of changes when it's going to change. It's going to change a lot of the other filters, because you're removing a lot of stocks that may have been negative in that filter, if that makes sense. So anyway, just trust me, I've done this for years, and I think it's best to always, anytime you make a change, go back in and run it again. You may have, like I said, 38 of these summary pages up at the end, but it can pay off. All right, now I'm on time. I better pick it up just a little bit. All right, wow, look what we did there just with earnings day, guys. To, gosh, almost tripling to a 3.15. You still got a nice sample size, 532 trades. I don't like getting this thing down too far. especially on a swing trade, because you know, I at least want about, you know, 6 to 8 trades coming through there every day. But let's do something else here. Let's go in and let's do optimize again. And now let's do it based upon, let's go ahead and base it on price here. I'm gonna put it on $5 interval. All right, these are all good. I don't see anything I want to change here. Now it gets a little bit sloppy down there, a little bit sloppy down there. Okay, I'm seeing some, but gosh, look how it picks up here at the end. See, when I see things like this, these could just be anomalies. I may not even change it. So what I'm going to do is I'm going to go to time of day now and see if there's anything I can go with here. Not really. It all looks good on the time of day, so I'm just going to leave it wide open like that. I'm not seeing any advantage to trying to, you know, cutting out a group of a section of time here. So I'm going to go to the other filters, and I'm going to see if there's anything that I can tweak on my current filters. And let's do price to earning ratio. Okay, we know we have a minimum in there of 30, but let's see if there's any advantage to cutting off some of that price changes in that price to earnings ratio. I always like to do the ones that I have in there, even though I don't do them first. I always like to go through and take a look at them, and I'm not in the right area. Price to earnings ratio right there, and let's just put it on 1. Yep, there's a few bad ones right there. You can see once the price to earnings ratio, the higher the better, but does it get to a level where it really starts to fade? Yeah, kind of there at the end. So let's just do this. Let's start at 3. Currently we're at 30. And let's go to, gosh, there's some good ones here. Let's saw it off right here at 27, basically. Make the high of this right here, 26.99. And let's run it again. Okay, we're up to 3.28 now. Still got plenty of trades. Look at this winning percentage, 71%. I'd love to get this a little bit wider, but that's still not bad. You got a 40-cent, what is that? Yeah, 41-cent differential there. I would like to get that, but you have such a high win rate here that it's performing well. Let's do real quickly. I'm gonna look at price again since I made a change. Now look at the time of day. Yeah, price. Let's do this. You know, I'm gonna go ahead and do $99. It gets kind of, even though there's some great trades in here, but it gets kind of reddish green. So let me cap it out at 99. See what happens. I'm afraid it may hurt our gap between our average winner and average loser, but let's give it a shot. Yep, that's good. Obviously, you can see our average winner dropped but so did our average loser. So that's a nice gap there. You got still got plenty of trade. 445. It's over 6 probably trades a day. So that's good. You got a nice win rate. This is a pretty interesting strategy. Now, this is one, guys, you want to test over time. Okay, it's showing some great numbers right now, but we have been in a nice run. Okay, we want to see how this is going to work. Over. When the market gets sloppy, pulls back, and and it has a downtrend for maybe a week or two. But we are going to save this right here. And before I do, I'm gonna go ahead and do this right here. Let's go to, let me save it. Optimized, and I'm going to put 2 because I've already optimized it. Okay, and then what I'm going to do is save and share this. And what I'm doing, guys, is I'm able to share this cloud link with the people who have trade ideas, and they're able to have this alert. And like always, I'll drop it in the chat window so you guys can have it. Now, I'm going to compare this one to one that I did this morning. Let me X out of some of these. All right. There it is. Let's go fish and optimize swing. And let's run this one real quick because I took a total different route to get there, but let's take a look and back test this and see how they compare. Oh, you're welcome, Waleed. And the key, guys, anytime you make a change in your optimizer, go back. That one's good too. I mean, it's 3.22, pretty close. More trades. I'll go ahead and share that one as well. So you guys can compare the two. And I will call this let's go fishing number 2 so you guys will know the difference. But here's the key takeaways, guys. I want you to remember this when you're back testing. Anytime you make a change, in other words, you do an optimization, go ahead and run it again. Don't try to go through there and get about 4 or 5 filters. And first of all, I'd be careful with how many you get anyway. I love it when I can just make a couple of changes and get these kind of results, because the least number of filters I have, I know it's going to stand the test of time better. But nonetheless, yeah, play around with it, guys. And not only that, when you leave it wide open with time, try messing around with some of the other filters, and then coming back and doing price and time. I always do, in most cases, price and time first, but what I will do is after I do it, I will open them back up when I change the filters just to see if anything's changed on my price and time. So, and I'm serious. A serious back test when you're doing this, you're gonna end up doing probably about at least probably 20 of these summary pages back test. You under premium version you have unlimited, so don't worry about it. You get as many as you want, and yeah, you'll get pretty quick with it, where you can put some of these things together fast and get some good ideas. But all right, guys, it looks like we ran out of time, but yeah, it'll be interesting to watch this and see how it performs. I know it's going to have a pullback once the market pulls back, but nonetheless, I think it can be a little helpful a window for you. But with that said, I'm starting to lose my voice. Thanks, everybody. Everybody's saying thank you. I appreciate it. You're welcome. Let me bring Scott back in. You guys hang on. He's going to have a discount code for you.
Good stuff, Andy.
Oh, thank you, Jamie.
Thanks, Andy and Jamie. Yeah, a couple items on the way out. Make sure you have that ebook that Andy and Jamie both contributed chapters to. It's got 5 strategies for winning in the post-BTFD market. It's free. It's useful. Get it. Go to trade-ideas.com/ebook and put in your email address to get the download link. We have a podcast. Should have a new episode up tomorrow afternoon. Be prepared. Have a subscription set. Search for Trade Ideas Podcast and wherever app you use to listen to your podcasts, and click on subscribe. You can scroll through some of the past episodes and find the ones that we have guests on. Those are some of the more popular ones. And then Jamie and Dan should be on tomorrow with some new stuff about what's coming up from Trade Ideas. We have a discount code that you can use for either upgrading or getting any new subscription, saving 15% off the first month or year. Use Trade with TI, all caps. That's good until tomorrow. I think it'll be good until next week. I'll leave that open until next Thursday, so you have a chance to use it. So Trade with TI, all caps. If you have any questions, email info@trade-ideas.com. That goes into our help desk software. It's the fastest way to get help. Or you can follow Jamie on Twitter @QuantBot. Steve Gomez is @TodayTrader. We also have @TradeIdeas. Facebook.com/TradeIdeasPro is the page on Facebook to follow, so you can share stuff we post there with your friends. Thanks, everyone. We'll have a recording up later on tonight or tomorrow. Thanks, Andy. Thanks, Jamie.
All right. See you guys tomorrow.
Yeah, thanks, everybody. Yeah, Friday support session. See you there. Bye-bye.
Yep.